One of the questions I get asked the most on social media is, Justin, how do I trade turtle soup? I'm not sure if it's because of the weird name or the overly complicated videos on YouTube, but people honestly just don't seem to get it. Since it is one of the most powerful ICT strategies out there, if applied correctly, I want to show you the path. In this video, I'm going to give you guys a no fluff breakdown of turtle soup with real examples of using this concept in my own trading. And one of those examples I actually took this morning. Now, turtle soup is an entry model that is based around internal to external range liquidity. In this drawing, I want you to focus on this here. We have an accumulation area, and above us, there could be resting buy side. Below us, there could be resting sell side. Currently, like this. Now, in the middle of this range is what we consider dumb money, right? People that are getting chopped up in this range, constantly fighting back and forth because they don't know what they're looking for. Now, below all these lows is resting sell side liquidity where smart money is looking to buy. And above this is resting buy stops where smart money is looking to sell. So the basic definition of turtle soup is selling above old highs and buying below old lows. But it's not just that black and white. In turtle soup, we are looking to align an intraday model with the overall bias. As you can see in this chart, there's a buy side and a sell side, which means this is internal range liquidity and this is external range liquidity. So when we're using turtle soup, we have a bigger time frame draw on liquidity existing. So what normally would look to happen is, let's say the draw on liquidity is sell side in this example. What we are looking to do is sell above old highs and look to continue to target new lows and then continue to target external sell side liquidity. And this here becomes turtle soup. Now, it's the same thing for the buy side. If the draw on liquidity is buy side and we have an internal range where we are generating liquidity to the lows, we are looking to buy those sell stops where market comes down, takes all those sell stops, and then continues towards the external draw. And again, this becomes our turtle soup entry. One thing to also pay attention to is above these areas of buy side and sell side liquidity in this range, you should be looking for key levels that the market can bounce off of. For example, a lot of the times I'm looking for a fair value gap either below sell stops or above buy stops. And what that does is it gives me conviction and another reason for price to actually bounce at those areas. So if we were looking to take a long in our external draws buy side liquidity, we're looking to take longs below sell stops, but also see if there's a reason for us to bounce here. If there's a fair value gap, let's say we're back in OTE of this previous price leg, right? All of these are possible reasons that we could look to see in continuation higher. One of my favorite things to add conviction to turtle soup is an SMT. For example, if this is what we're looking at, buy side liquidity is the draw, we end up selling off, taking these sell stops, and ES does not. For example, let's say this is NQ, we then form an SMT going into the soup. So not only are we souping the lows, bouncing off of an imbalance, but also having an SMT in favor of the external draw, you get a very, very high quality entry model. And one of the biggest reasons why I like taking turtle soup entries is because it's one of the best risks that you can possibly have for an entry model. Because you're buying below sell stops, a lot of the time, your risk is going to be significantly increased. Meaning if I'm looking to take an entry below sell side, and I end up buying, putting my stop loss in place, and then targeting the external draw, I get really good risk to reward with these types of entries. So just an overview. Turtle soup is only turtle soup number one when you have an external draw. You are buying or selling internal range liquidity to external range liquidity when you already have an existing draw on liquidity. We're looking to sell above old highs and buy below old lows. Here's a less complicated drawing of what the last one was, I guess, if you didn't understand that. This would just be a bullish turtle soup where we have a move to the upside, continue to generate liquidity on both ends, buy side, sell side. We take sell stops, we're looking to buy sell stops, and then have the expansion towards the external draw. And again, of course, bouncing off of some sort of key level. And again, it would be the same thing reversed for sell. Now, let's take a look at the actual trade that I took today and compare them and see if you guys can see the relationship. So this was the chart going into the day this morning. And my first thing I want to recognize is, again, what's the draw on liquidity? So going into the day, my bias was overall bullish. I was really expecting to see an expansion move to these buy side levels in the morning. We had two generated liquidity levels here, as well as a 15-minute fair value gap. If we zoom out, sell side to the left of us was taken. It also was kind of looks like an AMD, where we had a lot of accumulation, a manipulation, and then expecting distribution back to the upside. But now, just want you to focus on, number one, draw on liquidity is bullish, buy side. When market opens, we get displacement to the upside, a market structure shift, And now this is when I want to zoom in and I want to recognize if there possibly could be a turtle soup opportunity. So what has to happen first for turtle soup to happen? Well, once we get displacement, or once we're in a range and the buy model or the sell model is already playing out, this is why also recognizing models are very important. I'll link the market maker video that I have down in the description. But your goal is to first recognize the model. Going into the morning, I can recognize it is going to be a market maker buy model, and we're going to look to run up to these buy side levels. Once we get displacement, I'm expecting structure to start to build out. What happens? We put in a swing low. This becomes my turtle soup low. So I'm looking for the market to come down to this low, take it. Again, what happens here? We come down, we generate more sell side liquidity, and then we expand to the upside. So this is when a lot of people are starting to jump in and chase this trade. Now, what also happens here though? When we have this expansion move, you might be questioning, why did we not take the low right here and instead we had an expansion move? Two reasons. We generate more sell side liquidity, and when we have this move to the upside, this low brings this entire range back into discount in OTE. So now that we had this expansion move, turtle soup is now back in OTE of this range, which is an area in which, again, we already expect to bounce. So we're overlapping a key level with the turtle soup, as well as, again, a fair value gap as the key level too. So market comes back down, the low gets taken, I enter long, put my stop right below here, and again, this becomes a turtle soup entry. Now, another thing too, I won't overcomplicate you guys, but do keep in mind what time price starts to move. 950 macro, aligned, immediately gets reversed. 950 opens up right here, which is the macro, and we get a big expansion move to that high. And this was the trade and the turtle soup I ended up taking this morning. Now, turtle soup is one of those things where it takes a lot of experience and it takes a lot of time to actually see it happen live. So my biggest recommendation is start backtesting. Go into the charts, start looking for it, see if you can find it. And when you're actually trading, journal constantly. Even if you don't take a trade, look at the chart and say, hey, I think this is going to be turtle soup. Take a screenshot, journal it. After that trade ends up playing out, journal, hey, did this end up playing out or did it not end up playing out, and why? When you actually take the time to reflect on your thoughts intraday, you actually start to improve because you're soaking in your knowledge. When you simply just go about every day looking at the market and then not questioning your decisions or not questioning why you thought that, you're not improving. Those thoughts don't change. You don't get better. So look at the market, start questioning these ideas, constantly journal, constantly be looking to improve. If you found this video helpful, you also might like my daily bias video that I just dropped. Whether daily bias is brand new or just a refresher to you, highly recommend just to go check it out. And if you're someone who's still constantly struggling with your trading, you keep making the same mistakes, you can't seem to get out of your head, and honestly, you just don't know what's wrong, because trust me, I've been there. I've recently just opened up my mentorship. I spent the last 3 months making 60 videos of pretty much everything I know out of my brain about trading. The mindsets that made me successful, the setups that made me successful, and pretty much everything in between. A community where I live trade in the mornings, we do educational sessions, and just being surrounded by amazing people. If you're interested about getting extra help from me, joining our community, watching us live trade together, I'll leave the link in the description so you can go check that out as well. Thanks for tuning in, and I'll see you guys in the next one.